Good morning and welcome back to the Opportunistic Trader for October 24th, I think. Coming in on month end. Exciting day yesterday overall. The markets broke down. Looked like they were finally going to do it to these guys, Vince. And once again,
I know.
they saved them. So
You- I,
somehow, some way, they saved them. And they
it really
rallied.
settled above both of our levels. I gave you like a weekly level that it just refuses to violate now, and it's like, okay, it fell short. They couldn't get us positive, but they took us way off the load.
Oh,
Crazy.
we were $60 off the low. Nasdaq was 200 and change off the low. Um, this morning was interesting. I don't know when you were sleeping because I know you like to sleep.
Excuse
Yeah,
me.
I'm only kidding. For those of us who don't sleep, out of Europe last night, the S&P was down to 19 and a quarter, which it was down about almost $30. So I thought it was going to be exciting. And then Boeing's earnings saved the day. And I think that stocks up like $15 or was. I haven't looked at it just in the last couple of minutes. And it's funny. I was looking at my screen this morning on, I sometimes use a CNBC app, and it was like the Dow's up 150 pre-open, and I'm looking at the S&Ps and they're down 6, and then I'm like, I wonder why, and I guess it's just Boeing. So Boeing's counting a $15 move there is 100 Dow points, so it's pretty crazy. But overall, yesterday was a great trading day. We didn't do so great. I don't. What did we do yesterday, Mike? On our record, I don't know. I'm gonna not count it as really a win because I think some of our losses were actually a little bit more than our wins. We got hit in oil. Our spoot trading was pretty good, but I think we took
You
about a
lost
dollar.
90 cents in crude oil total, and you made 9 points in S&P total.
Oh, okay. So we made 9 points in S&P, and we lost 90 cents in crude. I'll actually count that as a winning day, even though we were small up P&L. And it's on to the next. We don't really have a position here, and I just sort of want to go over the foreign markets. I don't know if you touched on it earlier, but Asia was sort of mixed across the board. Nikkei down slightly, China up like 20 basis points. The DAX is up 70 basis points, almost 80 basis points. It was down this morning. I guess maybe that's the reason why. And other than that, there's not a lot moving. Well, let's talk about the British pound because it's actually back down to 129. It's still inside our 128 to 132 range that it's been in for the whole entire year. But
Extremely volatile. Just kidding.
exactly. Honestly, I don't know how people are making money in currencies. I mean, there's just no movement. You know, Actually, it looks like the euro's moving outside the range today.
Yeah, the euro, the FX pairs on the dollar side, the euro is weaker because of a couple things on top of the chronic, Italy Brexit stuff. Some flash PMI numbers came out soft, and the Bundesbank warned that they thought that their economies were Q3 was pretty much the top, and which is interesting to use your word because uh, you got a weaker euro on the back of that, but the stock market is a little bit stronger, which is what you usually see when you expect possibly an easing. But I don't know how they can ease.
Well, they're below zero, so you could keep
Right.
going, I guess, below zero.
Well,
But
they're going to ask us to ease for them, I guess. I don't know.
yeah, overall, yeah. So I guess the currencies are having a decent sized move today. Dollar strength. What's gold doing? Down,
Gold is yeah,
down five.
gold is significantly softer, but reversing it in this hour, but still negative.
Yeah.
Yesterday we warned between 1240 and 1243. That was an area for profit taking, and it turns out to be true. There's really no levels in between here and 1229 to trade. You could. I did mention. I did refer to you looking at the hourly chart that this would be something that you might consider buying if other things weren't better to trade right now. because the candle looks like it might be turning oversold for the hour or so. But gold's dropping because the dollar's stronger. It's that simple. The dollar's stronger across the board.
Yeah, it looks that way. Oil's an interesting one to talk about. Oil blew through every level yesterday. It actually was down over 5% at one point, and it had no bid. And even when the S&P rallied, which was really the false start and really hurt, I think, a lot of day traders yesterday was, and myself included, was I was like almost buying oil as a mean reversion relative strength trade against, rather than buying S&Ps, and the problem was that the S&P really ripped, and oil actually didn't rally and got weaker as the day went on, and it was really, it's interesting. We're $11 off the high. The high was like $77. It's a 15% sell-off-ish in that area. I mean, that's humongous, and
we're within shooting distance of the 200-day moving average. And now that may not be a thing to trade off of, but for me, it's usually a level to consider closing positions if I'm winning. $65, I think, is 200-day moving average now. And you're right. Oil usually had been moving like a stock. S&P's up, oil's up. And then what happened? Oil crashed, stocks crashed, or stocks crashed because oil was so high, and then oil came off. And you would think, okay, stocks are up, it's safe to buy oil. Not so.
Nah. Yesterday was not fun in oil. It bounced about 40 cents today. I do think you could see a bit of a rally in there. It's just, as I would say, it's a broken man. It's a broken commodity for now. And, but you could get rallies in there. I'm a little constructive for a rally. I'm not positioned, unfortunately. We got stopped out. I think there'll be really good trading in S&P today. I'm surprised the market came back here. It's really down 6, but it's really down about 2 because fair value is in here at some level. A couple of bucks from the market, and NASDAQ's down 15, but really it's about 6 over, so it's down 9. Again, they saved it from the brink. If we do go down today, for all of you out there, we may not hold. We could go through some levels. Again, 27.13, which doesn't look like it's in play right now, is a level that I think is important. That was that old low. We busted that by literally 20 plus handles yesterday and reversed.
Yep.
And but it was interesting because I felt like I was like in an Ali Frazier fight yesterday. They had him on the ropes on the downside, and then midday they rallied him so early that they literally could have ripped him, but they shut the computers off. And one thing you have to understand as a trader in this volatility, which is still, I'm looking at it, 21. So if this move was real and we were going to hold here, this move would have a 17 vol on it right now. But I think there's more to come. We're 21 vol. What was interesting yesterday, and Mike pointed it out as well, and I think you did, the last time we were down on the low at 27.13, volatility was 29. This time we broke the low, and yesterday at no point was vol, I think, above 25. So it's interesting to note that the fear gauge or the panic gauge was not near what the high was when we were 20 handles higher. So that, in a way, gave it away yesterday. And we always cue off of that because that's one of our best indicators right now that we're looking at as traders, is looking at the volatility index and movements there.
And I'm sorry, I want to throw this in there. And we don't, as traders, and I think I'm speaking for you, we don't look at the volatility index as a naked number like you'll see posted on a TV channel or something. Not to say that there's no merit in that, but we look at it how it behaves when the market behaves a certain way, whether under or overperforms, and that's an indicator as whether to fade or not fade a move. That's
right. But we're looking at it exactly. We're looking at it day to day. So let's just hypothetically say volatility was 25 right now. It wouldn't matter to us whether it's 21 or 25. We're looking at it for that day and how it acts at that number. So
Right.
vol could be 17 right now, and if the market starts ripping up to the upside for a day trade, and that vol is not coming in enough, okay, we're leaning to the sell side because we believe that the volatility is saying that there's more to come. Like what I'm looking at today, and again, we may hold up, and we probably will see the other side of unchanged at some point, I'm assuming, but the volatility isn't really telling me that. We're at 21, and that's relatively high for a market that is going to hold at these levels. So, utilizing that volatility right now for us is the number one cue to what we're looking at. A lot of these other indicators, sad to say, have let us down. Like yesterday, in a way, oil messed up my whole trading day because I was utilizing that as the long rather than the pure long, which was the S&P. And I should have, and I made a mistake. I went to that because it was relatively weaker on a percentage basis than everything else on the board. So,
Right. You saw that as having a good chance of catching up if the market rallies.
Well, that was the mean reversion trade that I was looking at for the day, which is a lot of what we do. And I'm saying to myself, hey, listen, SPUs are down a lot, but relatively oil from where it was to where it went to was a better buy. And the truth was, unfortunately, and the truth was only told after the fact, is that was not the case yesterday. And there was inherent sellers of oil. And the S&P is an interesting animal. Like if you watch it, it gets sold out. Also, another thing to note is volume was a bit heavy, but not crazy heavy. And the last time we got down to 27.13 on the S&P, we did almost record volume. So that's something that I think is important to know as well. The volume wasn't really there. I mean, it was good volume for a down day, but it wasn't exorbitant volume for a down day. So
right. And that ties in with the VIX, by the way. You said the VIX was at 29 the first time we washed out, about a week ago, right?
Right. So I don't think you had liquidators as much as you did the last time down.
Right. And this is not a day trading comment, but if you're a listener and you're thinking about, the drivers as to why that could happen, traders think this way. And I'm not talking about a day trade here, but I'm saying, hey, last time we were down here, VIX was 29. Last time we were down here, volume was higher. And now we're down here again. Okay, so I'm going to say less people are panicking. Those that had to panicked to this level. The next panic comes if we break through some level where other fund managers have to buy puts and or sell stocks. But it seems to me that everybody is becoming less nervous, even though the market hasn't recovered, which you decide what you want to do with that information as a trader. But intraday, it matters.
Yeah, and I was seeing some headlines yesterday. I don't know if they were true because sometimes the headlines aren't, or maybe they were true for that moment, but that the NASDAQ was having its worst month basically since 09 or 08. At that point when we were on the lows, and it's recovered a bit, but overall, unless they pull major rabbit out of a hat, which I don't see that they're doing or going to do, this is going to be a decent down month. Again, we have a week to go ish, so anything is possible, and they could rally. This market, they can rally a zillion points in an hour. So anything is possible, but it doesn't look like a good month. And what I think that leads up to, in a way, is the election that nobody's really talking about. And again, we don't talk politics, and I'm not bringing it up for that reason. But I think, it potentially could be a whitewash, and Trump can lose everything. And I think that sets up for a really interesting next 2 years where nothing is gonna get done. And I noticed yesterday, and he's trying to put through a middle class 10% tax cut or something.
I actually read the interview. I read the script. Go ahead, and I'll just.
No, I think he called out one of these senators or someone running for office, and the guy was utterly shocked. He didn't even know what he was talking about.
Right. Well, I mean, this is all part of the spin. For humorous purposes, we don't talk politics left or right, but we do talk politics as events that could drive markets. And yesterday or the day before, Trump said, and this color is humorous because this is, for me, this is transparency. in the sense that the GOP is trying to shore up their base. So, and that would affect the stock market. Perhaps we're part of the sell-off is based on anticipation that the GOP loses majorities and less will get done, as you're saying. But this is what was said. I want to throw this in there because it's kind of funny without mocking anyone. Trump basically said, "I'm in the process of using the verbiage that he uses. We are doing a middle class tax cut," and the interviewer said, "You want to do a middle class tax cut?" "No, we're doing it." And the interviewer, I think, called him on it, or the questioner said, "Well, Congress is out. And even if you wanted to do it, you couldn't do it because they're out until after the midterm election." And his comment was, "Doesn't matter, we're going to do it." Now, it's not about him. The point is, the GOP is trying to start their own, I guess the phrase is red wave. And I'll tell you, he's done a pretty good job in burying Powell or laying this stock market sell-off at his feet. I think he's done a pretty success. I'm not saying he's not going to have a washout or a whitewash in the midterms, which would affect the stock market. But I think he's doing a pretty good job of laying the sell-off at the feet of the Fed and getting it off of his administration, which could help substantially prevent in mitigating a washout for the GOP in the midterms, which could be the sell the rumor, buy the news in the stock market that happens.
Yeah, potentially that is the reason. I just listen. I just laughed to myself because when he was running, he was talking about rates being too low. It was ridiculous, and now he's talking that rates are too high. And I don't think he understands it, to be honest with you.
Right. Well, I mean, his intellectual, his grasp of that of economics aside, what politician? And I'm not saying he shouldn't do this, but in the age of Twitter, they come back to haunt you. In 2013, like you're saying, I saw the tweets that are being pulled up right now. Obama has rates at 0. This is dangerous. You shouldn't be doing that. You're creating a bubble. And now he's basically saying, you're killing the market by raising rates. So, what politician doesn't do that?
And the market's not even down. That's what's amazing about it.
It's just so much easier to fact find now that you got a president who's using Twitter. But last week you said X. I mean, imagine if every president did that, regardless of your opinion of Trump. If every president had to say what he was thinking on Twitter for the last 5 administrations, I think we might not have a president anymore because of how they contradict themselves and how politicians contradict themselves in general.
No, listen, after this guy's done, I'm not going to say no president, but this Twitter game is over.
I know.
What are people going to do? They're going to have to wait for press conferences.
I know. If he doesn't get reelected, maybe we should just short Twitter.
Well, we'll see. So, anyway, getting back to the markets, let's look at some stocks. Apple had a 10-point range yesterday, which was pretty awesome. Traded down to like 213, 214, which was the low, and got up to 223, $10 range. Facebook's really looking weak. Didn't really have a big range yesterday, but still hanging about $5 off the low of the year. Amazon's back to its bull market self at almost 1,800. Still don't like that. Goldman got down to the lows of the move at about 213, 212. Stocks were in trouble yesterday, but they bailed them. Somehow Tesla's back above 300. I saw comments from Citron that he's now bullish, even though he was bearish and suing the company. Now he's bullish. That guy's like 0 for 11. So we'll see how that stock does. I see it's up pre-market.
And I think part of the reason Tesla was strong in the last few days is because Tesla pushed their third quarter earnings release later, and so it's coming out today. And so I think people were buying stock in anticipation of the delayed release, pushback.
Was it delayed? No, I thought it was early. It's not an early release. I thought it was an early release.
I think it was a release that was pushed back, that was due another time and was pushed back. That's what I read.
I thought it was pushed ahead. But anyway, either way, I think did it come out today, pre-open, or is it? It hasn't been out. I don't know. Elon's probably high from last night and sleeping, so it's West Coast time, so he's probably 9 o'clock his time. We'll see. But anyway, I don't see a trade there. I actually think it's a short, but I don't see a trade. And overall, Twitter is $28. That stock got broken. I think the high of the year is like 45-ish. Micron made a yearly low yesterday at 37 and some change. That stock looks weak. Overall, there's not a ton. There's not a ton in here that I'm seeing. I see the market wanting to go higher. I don't know why. That'll be the first move, probably off the opening, and then we'll be trading for the day. We'll see.
It's interesting. Just getting back to Tesla, I just pulled it up. UBS downgraded Tesla, saying that they have a price target of $190. That came out at 7:14 a.m. and then at 7:47, Tesla was initiated with an outperform at. I thought it was actually JPM, but it's actually JMP Securities. I'm not sure about J.
They tricked you. They did exactly what they wanted to do. Now they got some press. It's the reverse. It's
JMP. I don't know who.
It's JP Morgan's cousin.
Right, exactly. But yeah, so Tesla's.
So that would be like McDonald's instead of McDonald's.
Exactly.
Right. And coming out, so we got new home sales at 10 o'clock. We got the DOE report at 10:30. So that'll be pretty interesting. And then on tap for the schedule today, we've got Andy LeBeau will be breaking down the DOE report at about 10:45. So the crude inventory report that comes out at 10:30. Andy will be joining us to talk at 10:45. Then we've got Aspen Trading. Dave Floyd will be joining us at 11 to go through technical analysis. He'll be sharing his screen as he does in the past. Breaking down. Different asset classes and different technical setups. That's been pretty interesting. And then at 1 o'clock, we have a special guest, CoQuest, which is CoQuest is seeds and funds a lot of different CTAs, commodity trading advisors, and they have a very big insight into the space of what it takes to basically take your trading to the next level. If you're maybe just trading your own account, trading some family money, what it takes to actually raise capital from institutional investors, whether it be putting performance together, becoming a bit more institutional. So they're going to have an interesting talk about that, and you can ask them questions. But, they're actually going to be joining us a bunch, probably once a week or so over the next few weeks, talking about a lot of different topics like that. One is, how do you take your trading to the next level? Another is what sort of trends are working right now, what's not working, where the institutional flow is going. So they have a really interesting insights that'll be interesting. That's at 1 o'clock today. Then at 3 o'clock, Tony Greer of TG Macro is going to be joining us somewhere in the 3 o'clock hour for a bit to talk about the equity market. Obviously, he's got a lot of great information, and he talks about sector rotation and different trends. So we'll be talking with him a little later on.
Got a busy schedule today.
Schedule with vol up.
Hoping for a good trading day for the opportunistic trader today. We don't really have any ideas right now, but we will be doing trading all day and hopefully come to you with some really good ideas. But overall, the takeaway today is like a hold day. If the market could hold, they'll be happy. Markets still look shaky to me. Volatility is still elevated. As Vince, volatility can't stay above 20 and have a market sustain. It just, in my trading over the last 30 years, it's never happened. We either go from 20 to 50 or we go from 20 to 10.
Right. If gold hates the teens. If gold hates the teens, volatility either loves the teens or hates the 20s. It has to explode or watch out for the
volatility
teens.
cannot hold in here. That's all I will say. I don't say anything else.
The 20 handle is not.
Vol can hold in here only because it's just not made. The computers can't handle it. They can't handle. Like yesterday, in my mind, the computer had to get annihilated. I mean, it was just a massacre. But because they can't handle 70-point moves, they're a directional machine that just buys all day or sells all day. So,
Right.
those things, obviously there's different trend following models and different, trading models, but some people go
But they're
3
not
days.
dynamic. They're one
No,
dimensional. They're either
no.
on or off, and they're not dynamic. They're they don't adjust real time.
No, they're
It's like a
built a
broker with a
certain.
buy order. He's told to buy, he buys.
It reminds me of a funny story, and I won't mention names, but I'll only mention the name of the firm. I was at Spear Leeds and Kellogg, and we had hundreds, if not thousands, of customers, tens of thousands across the country, and we had an office in Boca Raton, Florida, and this is in 1999, 2000. It was like Y2K, and there was, the market was frothy, and there was a guy in the office who was a market maker, which people don't even know what that is really anymore, in the NASDAQ. And he was, he would sit on the bid and offer and whatever. And the guy, it was a Y2K stock that went out of business, but, those stocks were running. It was a speculative time. And he kept selling and selling and selling and selling. And, it was on a big dot machine with huge printout. I mean, literally, I get a call from the company, and they're like, listen, XYZ guy, who I'm not going to mention the name, is over his limit. He keeps selling, and we have to shut the machine. I'm like, what do you mean you have to shut the machine? They're like, you got to go in and actually pull the plug on the machine. So I go down the hall.
It's like the first calculators that had ease on them when you
I'm
put too
not
many
even,
digits in them.
this is a true story. And we go in and we unplug his computer, and he was done. But it was so funny to me because he just kept selling and selling and you know what, he was totally right. But the bottom line is, A, he was over his limit, and B, timing is everything. But it was a funny story, quick antidote that that's what went on overall. Back in those days, you couldn't control the risk. Now they, everything is computerized, so there's no issue. But we had a customer, and he just kept selling and selling and selling. It was awesome. It was actually awesome. But and I won't mention his name because he's not on as a member, but it might get back to him. But
The early machines were very fragile, and they weren't very capable of handling that much volume.
Yeah, no, he just kept selling. I mean, it was like he sat on the offer. Anyway, that's the quick story for today. Getting back to markets.
I have a question from a subscriber. Where is the straddle right now for today, and what are you thinking with?
The straddle is $20, 19 bid at 21 or 20 and a half. What am I thinking? I'm thinking it's a short. The only thing is you gotta trade it with wings. You buy a couple of dollar wing, and you could be winged up, and as long as the market doesn't move $25 from the settlement on a closing basis, you'll be all right. But the market could swing $30 in 10 minutes. We saw it yesterday. So that being said, I like it on the short side. On a closing basis, the only problem, and a lot of traders should understand this, and it kind of hangs you up, is that when you do this, it kind of inhibits your trading for the day. So on a day like today, I would probably stay away from the options until later in the day, because I think there's good enough trading to be done. What happens when you put these straddles on to the short side is you can't really day trade or scalp, because if the market's down, you want to buy, but you can't really buy because you're inherently short puts, and the same thing goes on the call side. So my advice or my thoughts on this is that I would be short that, if you're not actively day trading. If you're actively day trading, I think there's going to be multiple opportunities to take 10 to 20 handles out of the market at these levels. So that being said, the answer to the question is the straddle pricing is not overly high. It actually is catching a bid as we speak. It's over 20 now. It's not overly expensive, but it's a good way, to put a position on. And the way you would look at this is if you did the 45 straddle at 20 bucks, you realize you're long at 25 and you're short at 65. Okay. Other than that, nothing else is going to happen to you. But when we go down on the extremes on the downside or on the upside, you're going to get whipped out because you may have to hedge. Like yesterday, if you had we were looking at the straddles pre-open, they were $40. Obviously, it was for 2 days of trading. But when we were down at those lower levels, all those straddles were worth $50. So, but there was some good premium to sell on the downside in the puts. They bid those puts when we made those lows. You could have made a lot of money. But to answer the question, if you're not wanting to day trade a lot, then the straddle looks good as a short, and it's a good way to put a position on and be able to withstand the whole day. If you're a trader and you want to be active, I don't like it early on because there's going to be some really, really good trading today, and we're ready to rock and roll. And, there'll be opportunities that are better than that straddle. Because even in 4 hours, if we're at the strike, the straddle will still be $8 or $9. Now, granted, you'll make $10, which is phenomenal, but you could take that out of spoos maybe 3 times today. So, we'll keep an eye on that. Interestingly enough, the NASDAQ, as I'm looking at it, is going positive on the day. That index is crazy because that index was up on Monday, $60. It's actually up on the week. I don't know. Where do we start the week, Mike? Is there a way you could check that?
I'll pull that up. It's interesting right now. Every FANG name is up small. And when I say small, I mean like 0.25%, which is for a 20 vol world, it's ridiculously small. Like Facebook's up 0.1%, Apple 0.1%. But looking at the earnings, it's interesting. UPS just released and they're down 4.5% right now. And so they're, a bellwether of the global economy and a few different things. And so interesting to keep an eye on that. Yesterday, Caterpillar had a really ugly day. 3M had an ugly day. And then going along with the bellwether of the global economy, I'm just looking at some, performance chart, G20 ETFs, where they are below their below their all-time high. Do you know where Russia is right now versus its all-time high, the Russian ETF?
Man, it's probably down 40.
55%.
Yeah.
Italy is down. What do you think there?
30.
50 off its all-time high.
Love that.
And, Brazil's down 45, Argentina's down 35, Indonesia down 35, South Africa down 35, Mexico down 32. I can keep going. But then you get to the U.S., where like S&P is 7% off its all-time high. And it's really actually less. It's 6.4%. So, I mean, you take a look at some of these global markets, and it has been a wild ride, whereas in the U.S., we're still up on the year.
Yeah, and I don't think we're going to end that way, young people out there. I think that it's going to get a little crazy again. I'd like to see the market open, rally higher, and then fail. I don't know what level it's going to fail off of, but that would really be nice for today's trading. I think there's going to be some good opportunities. We're going to put some spoos out, if we get close to the 50 handle, against 50, unless something really changes on news.
You asked about 74.40 is where the NASDAQ future was trading on Friday.
No, where it started the week.
Well, it closed there at 74.40.
It's down 300 points.
East NASDAQ.
Up on the week, I think.
Oh, that's.
I knew that couldn't be right. 74.40.
Yes, we are. That was the weekly. That was 3 weekly bars. So 71.06.
Yeah, so we're up on the week, 30 handles, like I thought. So, in all this panic, Vince, and I know you're panicking, so I'm going to keep you calm because I know you're out there panicking.
If you buy a dip and we go higher in the S&P, I will be fit to be tied.
We'll see. I should have bought it yesterday. I want to kill myself. I didn't even, literally, we were down there. If you would have, like, you know how, like, you could read into, like, you get one of those magician mind readers. If you read into my mind,
Yeah,
that wasn't even, like, on my page. Buying
right.
wasn't even a thought. Thank God I stayed away from, like, selling, up on the way up early on, but I was never buying yesterday. It just didn't feel right to me. But overall, the Nasdaq is just so strong. I mean, it's weak on the month. Obviously, it's down like 6%, but it's so strong relative. Like, it's not even. It feels like we're down like huge this week, and we're up again. And we were up last week small. So, it's interesting. Watch for news today. They'll probably try to throw some news in. They always do. And other than that, I don't have any high conviction trade right here. Again, I'd like to sell some strength if we go positive. Not going to be a dip buyer unless we really get cracked. But like Mike said, it's interesting. You look at the stocks. Apple up 19 cents. Facebook up 20 cents. Netflix up $1. Google up 4, which is a $1,000 stock. So that's like 40 cents on $100 stock. So, these stocks are not up. Nothing's going on. They're bringing them in for the opening to the higher side, and we'll see if we hold.
That said, the amazing thing with this 20 vol and with what you just went over with the fact that everything's up 0.1%, the overnight range in the Nasdaq is a cool 120 points.
I know, and what do you mean? And the SPO is
120.
Right, and the SPO is 30. So,
And there's a reason that you could be long that straddle and make money if you're not sleeping like Larry does. Larry will never buy a straddle.
I don't ever say never. I will buy a straddle. It's just very, very rare. I don't like.
Man.
No, I like that. That's why we work well together. You
kidding.
always buy. It's funny.
Well,
we would be a
exactly.
We are a dynamic
Always.
team.
We'd
win both ways.
Never say always. Oh, exactly.
But
I want to throw something that I actually have on my radar. Facebook. Below 159.30, which is a ways off. I'm not going to fade that. I will probably get a signal that will tell me to sell for 4 to 16 hours. If for some reason the Nasdaq leads and breaks, Facebook will be. It would look to me like Facebook would be the weakest sister today, and I would be. I will be looking to sell it below 159. 40 to 80 area. If we do have a weaker market, that's a system trade. The stop out would be approximately 161.5 if we get there.
It's interesting. So Caterpillar just came out with the results, and Tom McEntee's been talking about Caterpillar a lot. It was just trading in the 150 range a few weeks, like 10 days ago. We came out with earnings yesterday. It's gotten beaten up. It's trading at 119.82. I think it traded down to 115 yesterday. I'm looking at 5 or 6 different analysts per price, and they've downgraded it. But when you look at what they've downgraded it to, Caterpillar lowered at Credit Suisse from 210 to 183. Caterpillar lowered at Baird from 191 to 171. I mean, these guys are downgrading it, but it's still an upgrade of, they think they all have like $40, $50, $60 of upside potential. Wells Fargo lowered it from 180 to 145. It's kind of what's wrong with the analyst game of, it goes into a downgrade, but it's still significantly higher, and it means that their initial price target from just, where they were 100% basically higher than where it is right now.
Well, let me touch on that just for a second. As far as analysts go, and I know this really well. In 2007, 2008, every analyst was bullish on every stock, okay? In 2008, the market came apart. Into 2009, the analysts were still kind of bullish, okay? By 2011, every analyst on the street, okay, was told to have no ratings. 90% of these companies had no ratings on these stocks for 3 years, okay? Because every rating they had was wrong. Now it's 5 years from that point, and now every analyst is back doing the same stuff they were doing. Like Caterpillar's trading at 125. They have a a 175 price target on a downgrade, I mean, it's never hitting that. It's just not, you know, and then they'll come into 140 on the next earnings and 120, and the stock will always be $40 below it. We've seen this movie before. So, you know, that's an interesting thing. These big cap industrials are annihilated. It does make sense because the tariffs, you know, with China affect these companies probably more than any other company other than tech, which is shocking to me that tech's held up so well, because all that has to happen is China says, hey, we're putting an extra tax on every Apple product, and it's game over. And I would love to know how much revenue they get out of China, and that's their real growth market. For most of these technology companies, Asia's the growth market. They're already grown out in the United States. How many? I have like 4 iPhones. No, I'm only kidding. I have one iPhone. But how many iPhones do I need? I mean, literally, how many iPhones do you have? I mean, I have a friend. He's got a secret iPhone. Somehow we go out to dinner and he's pulling a second iPhone.
He's got the Tiger Woods iPhone.
He's got, yeah. It's like, I'm like, hey, what are you doing with that second? I don't have another phone. It's the same. It's just purple. I'm like, what do you mean? You changed the color? But most people have one phone. I don't see the growth. You know, the Asian markets are the growth catalyst. And, you know, this trade war, which I think is going to get worse before it gets better, you know, it's going to impact. You know, you're seeing a big impact on large industrial cap companies. I think you're going to see it in technology. I think you're going to see it on the earnings. I think, you know, we're in an interesting time. We're in the midst of a small correction. Everyone's freaking out. You know, we're only 6-7% from an all-time high, still up on the year. So I think, you know, the next 80 handles are the hardest. But when the SPOO goes down another 80, and we're unched on the year, and it's beginning of November, it's game on. And I think the opportunistic trader, it'll, you know, be a great place for people to be, because we're going to be able to navigate this landscape. We made a lot of money in 2008. We're hoping, you know, to get an environment like that. I am happy today. I'm happy. Usually I'm not happy, but I'm happy today. Volatility is 21. You know, overall, that creates opportunity. The option pricing is not pricing anything out of the ordinary today. That's giving us a clue. The one clue is I would think that volatility would have come in a little bit more if this move is going to sustain. So I do think we're going to have a little bit more, you know, downside on this move. Let's see how giddy it gets today at the lower levels. Kind of a little bummed out because I wanted to buy oil and I didn't do that. I bought it yesterday, made decent on the second trade in oil, which Mike isn't counting because it's so hard. He's like the trade police, you know. It's you know, so somehow I think I had a winner in crude yesterday, so I don't know, Mike. I think I had a 90-cent loser, and then I had a winner at the end of the day for like 50 or 40 cents or 30 cents, something like that. But I'm not going to count it. I got it. We are all good here. We're open-minded today. We do think there's going to be a decent trading range. As Mike said, we've already had over $100 NASDAQ range. We've had a $30 or more SPOO range. Let me look at actually the SPOO range. It's actually $30.70, 75 cents, $31, and that's a good range for the day. I would be interested and happy if they took out the lows of that range, but for right now, we're looking at stocks. Apple just went negative 10 cents, you know, Facebook's up 8 cents. This is a zero opening. It's actually surprising how quiet it is after yesterday. So we expect a lot. You know, it depends if they turn the computers on full speed or they put them on the governor. You know how like when you had your kids on the training wheels. Are we ready to take the training wheels off today, Vince? Are we ready?
Maybe maybe just one, and I'll only make left turns.
Right. Keep one wheel down just in case.
Yeah. Leave the kickstand out or something. Just do something. I
It's
don't fall.
funny. It's some funny stuff. But
Oh.
overall, not seeing anything for everyone out there. On a serious note, keep your eye on volatility. That gave it away yesterday. When we went down and made the lows, volatility didn't make an extension. We bottomed and rallied, and volatility came in most of the day. That's been a really good indicator for us now. Now, again, that could trick us. Like yesterday, oil tricked us. So we got to look out for the tricks. We got to keep focused. Okay. Obviously, dollars at levels, which we don't focus much on. It's not really a market mover, but dollars at levels that we haven't seen. The euro actually just bounced on a cash above 114, but overall got into the 113 handle. So we'll keep an eye on that. Dollar strength, and we miss this oil, so it's time to just watch it from the sideline. I would buy any dip in oil today. I think that's the trade. And SPOOs haven't really moved to $2. We're getting close to the opening, so I'm going to sign off so I can focus for the next 13 minutes pre-open, come up with some ideas and put them in the chat, and then we'll be back to you guys slightly after the opening for updates or any news that we see throughout the day. And as Mike said earlier, we got a packed schedule. It's really hopping here, and I'm very happy with what's going on with the op trader and Vince. As always, I'm very happy that you joined me this morning, and I look forward to. I use the word seeing you, but how do you say it in the chat? What do you like? Type in the chat? Is seeing you typing? So I look forward to seeing you typing in the chat.
See you in the chat. Yeah,
All
exactly.
right.